Hey traders, Chris Pulver here with another weekly outlook, the week of September 30th through October 4th. This is the end of Q3 and the kickoff of Q4 with a crazy big economic calendar. So we're going to take a look at that. What is relevant, what is topical? We have talks of Trump impeachment kicking around. Wall Street in search of a win as we figure out whether or not the markets are going to make new highs to end the year, or we're going to go into a little bit of a spiral as we finish off Q4. But let's let the charts do the talking. We didn't have a ton of economic news last week, and the charts were very obedient. We had some really good movements and good results last week. Going into this week where we have the end of Q3, start of Q4 with a big economic calendar ahead. Again, there's going to be more subject to noise, but at the same time, we're traders. We look at the technicals. That's what we focus on. So let's get into the details and nitty-gritty of the charts. In case anyone wants to follow me, go ahead and click like, subscribe, send me some comments. Here's how you can find me out there in the social media world: on Instagram at pulver.chris, on Twitter at pulverchris, Facebook, just look me up, type in my name, YouTube, same thing. You can subscribe to my channel, you can get notifications when I post videos like this and others, and there's my direct email as well. So, taking a look at the SPY first, we are sitting here with a brief breakout. Let me go into the daily chart. So we had our September breakout to kick things off. And I wanted to pay close attention to this area right here. Now, overall, the context of this chart is a broadening formation or a megaphone pattern. We have resistance, we have support, we have what is pretty visible as a potential rising wedge that is still taking some legs. We might have one more push to the upside, again, looking for possibly marginal highs with central bank support. With some global trade optimism coming. It just was talked about today with Treasury officials that there will be no denying of Chinese stocks from American investors. And that has provided a little bit of lift to what started off as a kind of risk-off trading going into early Sunday. It'd technically be Monday in Asia. But this is the New Zealand dollar extremely weak and starting to come back in balance. Meanwhile, you see the Swiss franc taking a big nosedive this morning through the Euro and London sessions. So this is around 3 a.m. Swiss franc starts to get a lot weaker and is currently the weakest of the day in the Forex world. Meanwhile, the pound is making a pretty nice recovery. New Zealand recovers as well. Everything else is staying around baseline. So taking a look at the SPY, will we sustain this run? Will we see the Trump impeachment probe and inquiries and investigation, if this even gets legs and get off the ground? Remember, it's led by the House of Representatives, but ultimately it has to be voted on by the Senate. So from a trading standpoint, I just want to see some movement. This volatility in here will make things pretty difficult. The bigger moves, probably the scarier move will be this, but this also can stay steady. We have this breakout level right here, technically speaking. If we can find some bottoms and get another push higher, although this is looking like a divergent push and these are making marginally higher highs, and this is ultimately going to be resistance with a broadening formation and a rising wedge, this could go longer, stay irrational, longer than traders can stay solvent. That's why we're not looking to call tops and bottoms unless you're willing to play this larger formation on a much larger time frame. So that being said, two things I want to talk about right away with the currency world. Let's go into the US dollar. The range continues. We have the Fed rate decision back here, end of July, early August, created a bit of a top. And then we had dollar news, dollar stability, more Fed talk, more this talk. It's just not breaking any major structure on the dollar. This was a 15-day breakout last week. So that candle was, trying to get the candle there, that is the 24th of September. We had 15 days of indecision, finally broke higher. I think that how I have this illustrated right here, if you look left, you can see that we have previous highs. I think that this breakout after 15 days of indecision will allow the dollar to score a point for the bulls right up here. So I do see the dollar getting a little bit stronger, not necessarily on all currency pairs, but probably the dollar Swiss for right now, the euro dollar. Maybe some stability out of the dollar yen. We'll take a look at that one later on. But, previous highs are being hit. I'm liking the spot up here showing that we're kind of in the overbought zone. But technically, if we score a point, then that gives the sellers an opportunity to push this back down. And if you just compress this, you'll see that this has been in a channel for a long time. We had lows back here in January. That was just after a large rising wedge that took months and months to play out. So we have that little correction and then more of the same. So really range-bound conditions, although it is slightly angled higher. I could see this being approached by traders in two ways. One is we have a lot of dollar bulls out there that just want to keep buying every dip, and we have a lot of dollar bears out there that are just looking to sell the resistance and say, look, this has been a long run, it's inefficient, it's overstretched, it's long in the tooth, blah, blah, blah. So I think that's why it's also very balanced, is you have both sides willing to come in and say, nope, this is supported, we're going to buy it. No, wait, this is overstretched, we're going to sell it. And so this just continues to go. So I'm looking at the big levels once again. The channel can play out. We've been waiting for kind of a right side of this pattern to emerge or a top to be forming. But again, look left on the chart. If it's not going to form now for this thing to break down, then logically this would be the next big level. That's right around 12,630 on the dollar index. Or if you're looking at something like the DXY, that is 100 or 100.50. So watch those levels really closely on the US dollar and DXY respectively. Now let's go into the currencies. Let's see how this translates into, let's go to the euro dollar actually, because the euro dollar has already scored that point. So the dollar index has not quite hit that new high, but meanwhile we broke lower last week on the euro dollar. Personally, I have a small position in at 109.30. I just bought the lows on the euro dollar. As a kind of end of Q3 scalp, I'm looking for this just to head back up to the highs here around 110. I bought it essentially just off these lows. Right there, I had equal lows. I bought it, got filled, indecision. I'm looking for a little pop to the upside. Now, this may translate into more. I don't know if that's the case or not. I'm not necessarily holding on to the hopes that it does. I would love to see that happen, but I don't really see a fundamental derailment of the dollar at this time. Maybe more so as far as the developments go in either the end of the year or we see like a big dynamic shift in 2020 heading into an election year on the dollar. But major support, major support. And again, future support here on the euro dollar. From the technical standpoint, if we see this head back up to a trend line around 1.10, I'll probably grab 70 pips and be happy with that. If it ends up breaking aggressively towards, 111 to 112, I will probably hang on to that for this run back up to this outer channel. I mean, resistance here, future resistance as well. So we are dancing around in the range on the euro dollar, just like we're dancing around in the range on the dollar index. So it starts off with, me buying low. If I can get 50 to 70 pips, I'll probably scalp it and just let it do its thing. But I do think technically that this move will be happening sooner than later. We might end up seeing some type of low on the euro dollar, some more prominent high forming on the dollar index. One thing I was talking to some trader friends about last week is actually mentioning that we haven't seen a flash crash since January 2nd, and that flash crash was on yen pairs and Aussie pairs. The way that the dollar is moving, I could see more of a top and bottom forming with some type of flash crash by the end of the year. Now that seems hard to fathom just because the dollar is so liquid. It's one of the highest traded baskets in the world for one of the most liquid markets in the world. So it would be difficult to see a big flash crash out of it. But flash crashes also are reasons for the market to kind of reset, establish tops and bottoms, and from there we see buyers and sellers come in and trade it a different way. But this is just constant back and forth, There's just so much intermediate structure here that if you've got some pips, protect them. But there's trades going either direction, and it's a very busy and volatile market at this time. Let's go to Aussie CAD. Let's start alphabetical, kind of whip through a couple currency pairs. So right side of the trend line here on Aussie Canadian, I'm looking for some major support around 89 to gravitate back up towards this outer trend line around 92.50 to 9300. Aussie Swiss, similar structure, right side of the trend line break. A little bit more bullishness that's cooperating here. Also liking that we had past resistance in August becoming future support. So you can see the indecision candles, 1, 2, 3, 4, 5. Today thus far, looking fairly promising for those bulls to come back in and protect the lows. So this former resistance becoming support, and hopefully this will start making its way back up towards, I've got a level around 69.50 and 7,000 that I'm looking to get to for profit on the Aussie Swiss. The Aussie Yen, same thing. A lot of indecision here as well. 1, 2, 3, 4, 5, 6 days of indecision. Just looking for a trend line break. I have 2 small entries in that are bullish on the Aussie Yen. If we start to head higher, I'll start moving some stop losses. My first target is just to take out the high. If we can take out this high, fantastic. If we can go up to this 127 extension, that should be very close to this previous high back in July. And that was before we had a little breakdown there in August. But if we can get back up towards those highs, I think that's a major battle won by the bulls. And again, previous resistance becoming support. Let's hold those levels. Let's get on the right side of the trend line. This should be a good scalping opportunity for anyone looking for some confirmation on the right side of the trend line for Aussie yen. And most likely that will be other yen pairs as well. Just look for some clean bullish price action. Aussie New Zealand. I was filled actually. I've taken a lot of profit on this one, looking to get back in, and I was filled at 107.07. We'll see what this one does. This ultimately can come right back down to where we have channel low to high, high to low, low to high, high to low. I wouldn't be surprised if it does want to come back down, but because we do have, equal rates, equal interest rates between the Aussie and the New Zealand, I might see this head up one more time to this high or slightly higher. I did take a trade last week around 107.07, and I probably will do my best to protect that around 100 plus pips, and then from there expect to see some more topping patterns and some efficiencies roll out. But this is a long-term trade for me. I want to keep getting in and keep buying this one low. I want to try to get this back to 110 or higher, or at the very least just see this outer trend line. Resistance way up here, resistance way up here, and even future resistance does park this around 109.50 to 110. So if it is going to continue to do that from here, I'll take some profit. If it works its way back into lows, then I'll acquire those positions and take profit at 110. But that's still going to be my destination on the Aussie New Zealand. Aussie Dollar. Aussie Dollar still in this channel. Again, I'll look at the dollar index and the fact that this has been in a downtrend since the high of February 2018. It's a year plus. There's our flash crash in January 2019. Equal lows just off the flash crash. Yes, we're drifting a little bit lower, but I really like the structure here off this channel. I think we can end up building a base and heading back to the channel. Now, it might be a little bit further extreme. We might see this drift a little bit lower, but right now I'm just kind of playing the channel. I do have a couple of entries here to buy low, and if it hits the outer trend line, I'll probably take profit. If the structure breaks, meaning price action gets on the right-hand side of this channel, then I will focus on buying for a recovery back towards 7,200 or 7,400. But you can see that that requires confirmation on the right side of this channel, right side of the trend line. So yes, I'm in a little bit early. I'm looking for the right signs to buy nice and low. I'm just essentially trying to buy these structural bottoms. And, step one is just trade the range, right? If it comes down a little bit lower and goes to the outer channel, I'll probably end up going to break even or better, taking some profit on partial positions. If the structure breaks from there and we do get into open space, then I'll stay with that, or I'll look for new orders to buy. And again, 7,200 to 7,400 on the dollar index, or I'm sorry, Aussie dollar. Let's go CAD Swiss. CAD Swiss. Give me a chance to buy it, please. I don't know if I'm going to, but hopefully it sets back up in the near future. This should be heading back up towards 7,600 resistance. From there, very interested at resistance at 7,600 to 7,620, and can it head back down? We've had a lot of structure on this pair, a lot of range-bound trading on this pair, and if I look at this from the higher time frame, I'm only interested in buying it. So these are the lows. We have support. I'm looking at levels here to buy from and just place pending orders off of a really just numbers. 73 to 7250 to 7200. Every 50 pips I'm looking to get in this trade. And the reason why is I would acquire a small position here, build myself up maybe a 1% trade or so, 1% trade looking at stop areas a little bit lower, and from there going after 76. This is just buying support and then taking profit up here. So it's just playing the range. I really like the efficiency of this currency pair. I hope it cooperates for us. I don't know if I'm going to sell it or not. If this hits resistance, what happens is it goes up to resistance and then pauses, and then it finally drops. If you're willing to sit on that indecision, then this will probably be a great trade at the downside. We've done that here, we've done that here, and then from that point forward, I was only interested in buying. I just started to become a buyer, take some profit, buyer, take some profit. I would rather be a buyer just because it's positive rollover, and I think that inevitably this will end up going higher, ultimately to 8,000. It's just a matter of where can I get those levels and how can I get this position built up. But I like CAD Swiss, hopefully allowing us to buy it again. CAD Yen. CAD Yen looking good on the right-hand side of the trend line. Entries that we were in together last week and the week before, starting to confirm. Nice little cycle going from lows to highs on the right side of the trend line. Our entries are pushing our way. Chart alarm set at a previous high. I would like to see this come back into 8,200. Nice little inefficiency there from July to August. That was the, if I'm not mistaken, that should have been the FOMC rate decision end of July. But nice level around 8,200, and we're currently trading at 81. Looks like 81.40 or so, which I'm fine with. Grab another 60 pips. I got 2 positions in. That should be 100 plus pips collected, and maybe more if we go and strike a point here, 83. Trying to ride this out a little bit longer. Swiss yen. Swiss yen. The Swiss franc is weak today. This currency pair is pretty much off my radar for now. Euro Aussie, just going in alphabetical order here. Euro Aussie, let's see what happens. This structure is still a rising wedge. We may end up finding the highs one more time, but this could also be a head and shoulders, and we look for a breakdown in here. So watch this area very carefully. Left shoulder, head to neckline. Right shoulder, question mark? I mean, we might come back to 64. We might end up forming a pattern in here before we get the official break. But one thing I can say is that if we see a break here, focus on selling. Because even if it breaks down and then works its way back, there's a lot of resistance, and it should trend to the downside. So Euro Aussie should be a good trade to the downside. And once we have that confirmation, and this is rocking and rolling to the downside, then Aussie Swiss looks great for the upside, which is why I'm long on Aussie Swiss. And we were already short on Euro Aussie up here, and we took some profit. And I want to get back in, that's all. So I'm looking for more confirmation to sell. I know some traders that are still holding short on Euro Aussie, and I think that's great. They'll just look to add to it and build up a position favoring shorts. Euro CAD. This one, watching, I did get filled on an entry here. 4464 was a test off the lows that did get filled. Again, watching the inverse, CAD Swiss to Euro CAD. They will move opposite. So as this is heading lower, CAD Swiss is heading higher. There is a lot of resistance on CAD Swiss at 76. Therefore, around 44 to 4,300, you're looking for some pretty important support on the Euro CAD. So personally, I am buying this. It's just a very small position here. Position 1, position 2 is going to be a little bit lower. For starters, I can trade the channel. I might just deal with this channel first, and I am looking for a channel break to allow this to get up higher. But I'll probably sit on this trade for a few weeks and see how things develop. It is end of Q3. We're about to kick off Q4 with a crazy big calendar, which, by the way, I'll show you near the end, so stick around for that, just to talk about what we're going to digest this week in the news. But there tends to be some end of month and end of quarter movement that might not make a lot of sense. There could be some stubbornness out there that we'll just have to kind of sit and get through. So I'm fine in this trade. I'm just going to look to acquire small positions. There's one, and there's two around 42.50. And from there, I'm looking for this to head back up towards 5,000. Euro Swiss. I continue to hold long on the Euro Swiss. We're still hopefully building a nice position off of 10800. And let's go somewhere. I will buy this again around 107.20. If it holds these levels and starts working its way back up, anything at 1.10 or higher, I'm going to be protecting. So I did acquire positions in here. Also waited for an equal low, and I got filled. So I've got a good chunk around 10900. If I can take that to 111, I'll be pretty happy with that return, and that's a nice safe level to get out of as well. Euro Pound. Euro Pound just seems like the story of, you know, from a technical standpoint, what goes up will come down. From a fundamental standpoint, who the heck knows what's going to happen with Brexit here as we come into October. Major dates to keep an eye on: October 19th, October 31st. Will Boris Johnson resign if there is a no Brexit? Will it get delayed? I don't know. It has made trading the pounds, you know, it's made them very noisy, but from a technical standpoint, the pounds have actually done just fine. You know, we were short Euro Pound. We sat on it for a while. It came all the way back down to levels we wanted it to, took some profit. Pound Swiss, we were long. Pound CAD, we were long. Pound Dollar, we were long. Technically speaking, it did what we wanted it to do. So that's a good thing, but it could get very wild and very noisy over the next maybe 3 to 4 weeks. And I just think it's better to be safe versus sorry in case we are doing things like we see a flash crash in the pound, or we see a massive gap over the weekend that doesn't get filled and traders get stuck on the wrong side. I would rather not be positioning myself heavy on pound pairs, not to mention the fact that margins are extremely high. So all that being said, I'm just going to kind of gloss over the pound pairs, but technically they're doing everything we need them to do. I mean, this may head a little bit higher, maybe because we want to see if it does have another chance to short. But in true fashion of what has gone up, this might just keep melting down and just take all this back. Everything was a big bottom here around 8,500, and we could literally come right back to it. So my prescription for trading the pound pairs is to really focus on like the 1 hour charts and trade anything smaller. 1 hour for some structure. Try to stay within the momentum of the week and not get too position oriented. If you are looking at the higher time frames only, then you want to be building off of like daily and weekly levels and just trying to pick your battles closely. But like I said, I'm limiting the exposure. I don't want to take a bunch of unnecessary risk. And there are other currency pairs out there that are way more lucrative and not nearly as volatile and uncertain as the pound pairs. So that's the euro pound for now. Euro yen. Can we break this trend line? Let's find out. So we have a nice little trend line right there. And I would like to think we can get on the right-hand side of it. So let me go to a 4 hour chart. Just connect the dots. So connect the highs here. We're on the right-hand side of it. If we can hold these lows or just a little bit of time, another couple of days, without a convincing break bearish, I mean, holding right here is a big level. This yellow box was there for a reason. And if we can hold this level and get on the right-hand side of this trend line, then let's go. Let's see if we can see the JPY basket weaken enough to hold these levels, get on the right-hand side of the trend line, and start working its way back up. That's also why I like Aussie yen long and CAD yen long. Euro yen would be kind of the same thing, just letting it get on the right-hand side of the trend line. Stop areas can go below, and you look for gains to the upside. Euro New Zealand. Euro New Zealand, great trade last week. So traders were short with me at 75.50. We rode this all the way down towards 73 and 72. What was that low actually? Right at 73. I think I ended up stopping out with a protective stop around 73.50 or 73.70. I ended up grabbing 230 pips out of that trade. And I do want to get back into this. In fact, I just put another pending order at the top. Now, I don't know if that's going to get filled, but I'm putting another order right up here for starters, and then I will be evaluating the structure in here. This has a little bit of an intermediate high, and if I look right, that could be some resistance. So we have a level in here, maybe a nice clean trend line break. If this consolidates, look for this thing to push down a little bit lower, and this could be a continuation. This would be your swing, your correction, and your push, or some impulsive wave, corrective wave, and another impulsive wave. I'd love to see this get back to 72.20. And all the way back down to a Draghi spike. That's an ECB press conference move around 70.80. So I do think that this has more downward potential. It's just trying to get a good spot to sell nice and high. Euro dollar we have done. Looking for that little coiled trend line break. Can we get back to 110? Can we break that structure and head to 112? Watch the dollar index and see how it responds. Pound pairs, like I said, we're going to gloss over these. Pound pairs, really volatile, really choppy, day-to-day price action. You're getting some movement. If we've got some scalpers out there in the world that want to get their hands very dirty with the pound pairs, there's more than enough opportunity to do it. Just be careful. Just try to win the day. All right, pound CAD. This, from a technical standpoint, did what we wanted. We did scale in, off of these lows, Once we had this first leg, it did take a while to sit on. We had to sit on this trade for a couple weeks. I had some incredible traders with a ton of patience that from this area sat on it and then took profit up here around 66 and then shorted it, which was what we wanted to do. So why do we have that green box? One, that was a massive level of past support becoming future resistance. So as we did break the right side of this trend line, that was going to be our magnet and our destination, and lo and behold, price got there. So all of our positions from 63 and 62 and 6,000 paid out very nicely at 66. And then the more aggressive side was, because that was support becoming resistance, traders came in here, shorted that little rising wedge, and took it for 200 to 300 pips to the downside. So even though this really hasn't translated into a ton of movement, we've had a nearly 2,000 pip trend to the downside, and with acquiring some small positions, anywhere from 300 to 500 pips worth of movement, and we went from 5,900 to 6,600. That's a 700 pip recovery. So 700 pips to the upside, another 200 to 300 pips to the downside. It's great to get a big trend, but you can still get some really nice structure and good profits. And again, I'm glad it behaved. I'm glad it just wasn't a runaway train. So because we had this big decision cycle to the downside, part of me is almost looking for this behavior from this low to this high, back to this low, back to this high, back to this low. I want to see if we can get some range bound trading on the pound CAD. It's not there yet, and I'm not interested in it right now. This is a no trade zone for me, but resistance would be around 66 and support would be around 58. So if those levels play out, I'll buy low and I'll sell high, and I'll see how long that lasts. But that's really the next phase for the pound CAD, in my opinion. Pound Swiss, same thing here, green box. All these levels that we expected it to get to from a technical standpoint were hit. There is a simple trend line break. Break the trend line, go to the outer trend line, break the trend line, go back to previous support resistance, go back to a Fibonacci level. All these things from this crazy strong trend to the downside, just technically speaking, came back where we needed it to, allowing traders to get out with some protective profits. Pound yen, this one I would look to stay long in. If we get a nice trend line break, which we are, is the pound yen my favorite one to trade? No, I'm going to trade Aussie yen, CAD yen. I'm looking for Euro yen. But pound yen I'll just cross off the list, but we should go higher in this one. I think the JPY will stay a little bit weaker. Pound New Zealand, another great trade to the downside that we shorted right at the top. 2.00 was a crazy good fill, and we end up dropping all the way to 95. So there were over 500 pips of opportunity here. I believe I ended up closing out for 350 of those pips. I just got protective and ended up getting spiked out with a little noisy trailing stop, but that's okay. I'll look for another opportunity to short. Just like on Euro New Zealand, I put a pending sell again at the high if it happens to find it. Otherwise, I'm looking for this low, little bit of a pullback perhaps, watch for a trend line break, and look for another leg lower. So just a decent move from high to low, look for a little correction, and look for a lower high to lower low. Just another push. If you keep an eye on a level here, 9360. 9360. Watch that number. I think that will get hit on the pound New Zealand. Pound US dollar. This one I'm probably staying the fudge out of right now. If I'm going to buy it, it's going to be at 20 or 1.20. If I'm going to sell it, it's going to be at 3,000. Really not that interested in anything in between. So this to me, after buying the lows and getting a great trade to the upside towards 2,600, grab your money and enjoy it. And the next spot is buy it low with a tight stop and see if that reacts, or sell it high with a tight stop and see if that reacts. But the rest is noise in my opinion. New Zealand pairs. What started off with, wow, noticeable weakness overnight on the New Zealand. I am in long on the New Zealand CAD, and let's take a look at the daily chart. Overall, this is just a big channel that I'm seeing here. Lots of support over here around 8,300, and we are there. So can we hold this level? We are on the right-hand side of the trend line. Can we just get this low to form, and we could get a push back towards previous support? That's 86. Can we get a push back towards channel highs? 89. So if we can form some bottoms, and this goes exactly with what I talked about last week. If you caught my weekly outlook last week, I was looking at all New Zealand dollar strength. You can check out that video for the weekly outlook of, what was the week for last week? It was in September 23rd through the 27th. So if you take a look at that, I was very emphatic on the New Zealand dollar getting some strength, and we did see that in the short term. The structure is still there for the basket. New Zealand CAD, I'm looking for bullishness. New Zealand Swiss, I'm looking for bullishness. So channel lows, divergent conditions. Can we build off these bottoms? I mean, look at this. We come back in here, look at the lows in price, look at the disagreement in momentum. I love it. Look at where we are in this cycle. We should be able to go higher. So can we get up to channel highs? Can we see a few hundred pips of strength on the Kiwi? Technically, it looks like we should. New Zealand yen, maybe not as technically sound as the others, but still looking for a trend line break, which we have. If you wanted to buy this one low, it's right there for you. You can buy this low, stop area here, or stop area below these August lows. Look to acquire this move back up towards previous highs, inefficiencies, pockets, gaps, all sorts of good stuff. Again, write this number down. It might seem like a long ways away, but 73.50 is a gap on the New Zealand yen. New Zealand dollar, another one, equal lows. I have a pending buy at 6,200, 6,210. It's actually 6,207. But why am I buying there? Because it's a big level of support on a higher time frame. So I will buy it there. This is position 1. This is position 2 if needed. Otherwise, this low, disagreement, disagreement. Let's go. Form some bottoms. Let's go. We do have non-farm this week on Friday as we kick off October. This could be, again, Q3 wrapping up, positioning, and then Q4 starts off with maybe some dollar weakness, maybe some commodity strength, maybe some good news out of US and China. That starts to give the risk appetite to the Aussie, to the New Zealand, pairs like that are due for some nice technical recovery. So I like New Zealand dollar long. Dollar CAD, probably going to leave it alone. Lots of indecision here. It's eventually we'll get a trade on it. You know, the dollar will be more clear, so will oil, and then you can make an assumption and an educated guess on where the dollar CAD is going. But until then, not trading it. Dollar Swiss back up towards 1.00, a little bit of a fake out. Look at the dollar Swiss compared to euro dollar. and compared to dollar index. If we score a point for the dollar Swiss to the upside, let me just use a straight line here. If we score a point to the upside, look at this. This could just be a fake out, heading back up to higher highs. This would possibly bait the bulls to come back in right above 1.00, which is parity. And then from there, we might see this go back down. I'm not buying this pair. I'm not selling this pair. I'm waiting for structure, but I am looking at the structure closely on dollar index, euro dollar. How does the dollar Swiss fit in there? Because there is some relationship. So, right now I'm liking that the Swiss is weaker, but I'm more interested in CAD Swiss long, Aussie Swiss long, New Zealand Swiss long, not so much dollar Swiss long at this time. Dollar yen, another one that I think has some legs to the upside. It responded very nice to what? Past resistance here becoming future support. If you took that trade, buy trades right off at 107, currently trading back up to 108, and hopefully we will see some higher highs coming from that. Anything on the exotic front, dollar peso coming back up to fill a pocket around 19.89. It's not low enough or high enough for me to buy or sell. It's just some intraday structure that I've been watching and kind of analyzing, but I only really get interested in the peso at big levels. Yes, yes, yes. Those are sell trades. Yes, yes, yes. Those are buy trades, right? Anything in between, you've got to be watching intraday. You've got to have some, kind of more of a scalping system, intraday system. There is good volatility on the peso, of course, but I like the big levels, and I like to go after those trades where it's like, look, we've got 10,000 pips lined up here. We have 20,000 pips lined up here. That's what makes me interested in the peso. Dollar krone, anything here? Probably just going to continue to drift higher. Anything in the crypto world or oil? Let's go to oil really quickly. Oil, after the drone strike in Saudi Arabia, does it change the structure? Is oil going to $100 a barrel? Nope. There's your fake out there. This $60 to $50 level is still holding. So oil is incredibly volatile. I'm sure that there are lots of future traders out there just salivating to buy it again low and take it back up. Stop area is tight. Buy it at $54, $53. Take it up towards 60. Sell it at 60. Stop area above. Take it back down to 53, 54. And repeat as necessary until structure finally goes somewhere else. Now, one thing that is interesting is look at 2018. This was a high in October. So are we going to see a trend appearing in Q4? And if so, is this any indication of where oil is going to try to go? I think there are, would I see oil repeating that big move there to the downside? Probably not. I think that makes everybody uncomfortable if oil is getting down below $40 a barrel. I think right now there's so many things that can happen as far as supply and demand, and everybody can operate within these margins, or not everybody necessarily, but obviously more can participate and be satisfied within these margins as opposed to down here or even opposed to up here. I mean, consumers will complain when oil is this high. Countries will complain when oil is this low. So I think that this is kind of the balancing point where everybody's okay with where price is at. So as a trader, if the structure holds, then trade the ranges. There's support, there's resistance. There's support, there's resistance. You can trade within those levels and you can make some money. Gold and silver. Let's do silver first. Silver, big corrective move to the downside. This is coming down with some velocity now. I continue to look long only. This could just be a corrective move, a very violent corrective move, but nevertheless, maybe $16 to $15. If you do zoom this chart out, you will see where we have past resistance right here on this trend line. Resistance, connect the highs. Could this become future support? Could, right? Resistance, resistance. All of these resistance levels, if you draw a trend line right in there, same thing. Something between $16 and $15, if that's a bouncing point or a bottoming point, that would be the next leg up on silver. If silver comes all the way back down and flattens out below $50 or $15, then what a burst that was. Building off of lows, building off of lows, building off of lows. I've had a nice run on not just silver, but also SLV and USLV and a lot of instruments tied to it. I was pretty certain we're going to get to 20. And I still think that we can if this $16, $15 level holds. However, if we do end up resetting back towards $14, then I will just add more at this time. I think this is such a strong level of support, But the lesson learned here is instead of holding out to $20, perhaps if I I'm just hanging on to this. When we do get to 20, all well and good. If we don't, and I add more to it at the lows, or I come all the way back to break even, then anything back to this high, then I'll probably start protecting or closing out partial positions. But this is where I'm looking at, and longer term, I hope there's more upside. But anyway, it's been a pretty swift correction in silver, and gold, same thing. I was watching gold, which did look, I got to type in the right instrument, which did look like 1500 to 1530 was holding, and you can see that it in fact is. So now on gold, this would be my kind of corrective structure if we're going to see it. It did get a little bit, I mean, you can clearly see some imbalance on this breakout around 1300. So we went from 1300 to 1500 with nothing more than a pause in between. So I could see this pausing back here in around July 2019. That pausing cycle would probably allow this to come into this same area. And then again, around 1350 to 1400, do we see support levels for more gold? Not sure. Not sure yet. So, you know, they're probably just to continue to play in long term. You know, if you want to be long term, great. If you're scalping, I've talked about the structure pretty firmly at 1530 and 1540. I know a lot of futures traders that have been short gold and actually loving this run right now, and they hope it drops a lot more. And I hope it does for their sake as well. They can make some pips on that, make some dollars on that. But for me, I'm just going to watch this level. If I am a holder and a buyer, then I'm watching there for more upside. If I don't get it, then I'll just buy it again down here, and I'll just sit on it until 1500. And next time I'll take profit, unlike what I did this time. I've just been sitting and holding. So patience, right? All right, oil we did, gold, silver. Let's go to Bitcoin. Yikes. Bitcoin hanging out at 82.93 currently. That's live price. We had a big breach of 9,700. I was looking at this 9,700. Lots of support right there. We did break that structure. So is this a corrective move into 7,200? Most likely, yes. I see this as an A, B, C, D down into 73. Now, harmonically, that could be a nice corrective move for more upside to come. Technically speaking, if I look also at the right side of the trend line in the channel, you can see the resistance. We were so close to just going long enough with time to break out. But in fact, it's like just when it was starting to look like, well, we've kind of got to go up. Nope, it didn't. So where are we at? We're at the 50%. If you take this low to this high, we're sitting right at the 50%. So, I mean, realistically, this is totally balanced. Now, if we build some support and we hold, we go back up. If we come all the way back down here again, then we might have an intermediate range setting up from 3,500 all the way to 13.7, and then all the way back down to 3,500 and all the way back up to 13.7. So we really might be looking at a kind of trader's paradise if that is the type of movement we're going to see. Of course, I don't know if that's the case right now. This could still be well on its way to this area being a larger crown formation. This would be your right tip forming, and we'd still have a new high, and the target would be 2017 highs. But if we come all the way back down and reset at 3,500, I will probably just buy it again. I'll buy it, hold it at 0. You know, I mean, if Bitcoin becomes 0, then okay, it wasn't worth holding. But that is a finite amount, and I'm willing to part ways with that risk capital if that happens. But otherwise, if it's here and it goes up, and it's here again and it goes up, instead of trying to hold out for the big win, it's just take your profit or take part of profits and then get back in. Because who knows how long this can go on. I mean, we don't know the future of cryptocurrencies. I know that they're not going away. I know that there's still hacking issues and regulation issues. It is a legitimate way to be a trader, be an investor, and hopefully see some just ridiculous gains in the next maybe 5 to 10 years. So anyway, this video is getting a little bit long. Let's go ahead and wrap it up for the weekly outlook. One thing to keep a very close eye on, like I said at the very beginning, is it's a very busy week. End of Q3, kickoff to Q4. There's only 100 and some days left of trading for the year. We have a lot of fundamental things that have to come together. I'm very interested to see where the Fed is going in Q4. Will October be another rate cut? Will they start kicking it down the road to December? Are other central banks kind of staying put? We've seen the RBNZ stay the same at 1%. The cash rate decision for the Aussie, you can see there's a forecasted rate cut at 0.75. That's on Tuesday the 1st. If they cut rates, that is, again, as expected, why we've seen a little bit of weakness in the Aussie front. But does that change anything? I mean, if the Aussie's weakening, does that mean that it should just be beat down, beat down, beat down? Every central bank is trying to do the same thing. It's, again, back to 2012 and 13 called race to zero or race to the bottom where other central banks are looking to cut rates. So it's a busy week. This, if you go back to last week, light calendar. Go back to the week before, fairly busy calendar. Week before, light calendar. So big calendar this week. So what do we have? Going into today, high impact news, build and approve out of Aussie. Aussie kind of is front loaded for the week. Rate decision expected to cut at 0.75. That is a big deal. That would be 2 cuts, I believe, this year. So 1.5, they cut to 1.25, then cut to 1. This would be 3 cuts this year if they do that to 0.75. That'd be 3 cuts by the Aussie. Rate statement of Governor Lowe speaking, CAD GDP. We have, I believe this is a Golden Week holiday for China. There's holidays all week, Monday through Friday for China. What else? We have PMI numbers coming out of the U.S., retail sales out of Aussie, a lot of Aussie news this week, and a non-farm kickoff on the 4th. I am going to be running a live session on Friday the 4th at 8 a.m. We have U.S. dollar job report, expecting 140. Unemployment rate likely going to stay the same at 3.7, and average earnings expected at 0.3. Why is this important? Because based on what this data reads, along with other U.S. data, that's what is the Fed going to do. We've seen some Fed speakers talking about wanting to cut rates more. Some want to stay steady and just kind of be data dependent. So it's just, again, you wait and see, right? All that wait and see. Here's the dollar. There's the dollar index. Is it easier for the dollar index to stay bullish? Probably. Is it short-term related where we see this high make a technical divergent high and then the dollar drops even though the news might be positive? Or maybe it's negative news that allows this technically to come to fruition. All these things have to come into play when you're a trader. So it is one day at a time. It is one step at a time. But we plan on the higher time frames. We're fundamentally aware, and that's how you got to trade. All right, so if you have any questions, here is my information. Instagram, Twitter, Facebook, YouTube. Subscribe, like, send me a comment, send me an email. Happy to help. I hope you're all doing well. Had a great weekend, and let's have a fantastic week as we wrap up Q3, kick off Q4, and let's close the year out strong. All right, talk to you all soon, traders. Bye-bye.